Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me Eric Foster, CEO at Woop Insurance and
Hey,
unapologetic insurance nerd. Eric, thank you for
that's,
joining me today. How's it going?
it's fantastic. Thanks for having me, Tony.
My pleasure, my pleasure. So actually, it looks like we just connected recently as an
We did.
actual LinkedIn connection in early 2024. Sounds like you were kind of familiar with some of my crazy stuff out there before. Um, Basically, uh, let's see. Hold on, you're in the Philly area. We're recording in May, so Philly is probably either really nice or a little bit chilly. Like I was in Chicago last just a couple days ago, and it was downright chilly. They said that I missed the 80-degree weather that happened a week before. So what's Philly like right now?
Yeah, kind of like day by day between the two you mentioned. Earlier this week, it was really cold and had to wear the hoodie, and then walking outside today, it was a little hot and muggy.
Okay, okay. So we always give the guest the chance to give the elevator pitch. What is Whoop Insurance? And by the way, every time I say Whoop, I really want to go woot woot.
I think
Uh,
that's the goal, right?
it's working. It's working. So yeah, what is Whoop Insurance?
What is Woop Insurance? So we are an insurance technology platform. Easiest way to think about us is we work in the insurance agency side.
Mhm.
Our goal is to make insurance simple, transparent, and convenient. And we are in like the most basic stuff, the standard personal lines, home, auto, renters, condo, etc. And we function and distribute as an agency, but I'd say there's a lot more to it.
Mhm.
So our goal is for anyone who engages with us, we provide an unbiased database assessment of their coverages, their risk, and in a manner that they can decide to work with us, or frankly, go wherever they choose to do, or just take our advice and go update it on their own. So our goal is really to kind of elevate the entire experience from the industry and enable people to make good database decisions.
Okay, so enable the final personal lines insurance client, the
Correct.
buyer, the homeowner, the renter, the auto owner, to
Yeah,
make good database decisions when it comes to their personalized insurance.
100%.
Okay. Um, and it looks like you've been doing this for about 4.5 years.
Correct.
Um, Now also there's Dealer Vantage, which shares almost the same logo as
Yeah.
Whoop, and is newer. What is Dealer Vantage?
Awesome. So we gain access to prospective insurance customers almost exclusively through other businesses.
Mm-hmm.
Particularly, we work a lot within the automotive finance space.
Okay. Mm-hmm.
Dealer Vantage is basically our distribution brand specifically catered to car dealerships. It is just one of our companies that has a name that resonates a little bit more closely with them, and it's an easier way for us to say we're catered towards the dealership space.
Okay.
Um,
In that space, basically when somebody walks into a dealership to buy a car and they don't have insurance, so they need a quick insurance card
Not at
to be
all.
able to
That
drive
is,
away.
we're like the opposite of that, actually.
Okay.
Yeah, we take a slightly different approach to this,
Okay.
right? So our thought process is there's probably about 10% of people who walk into a dealership that
I
don't
would
have
guess.
insurance.
Yeah.
Yeah, really, really small number, right? But there's a much higher number, a much higher percentage of people who are financing the purchase of that vehicle
Mm-hmm.
and have no idea what they're supposed to do. They're not sure what the coverage requirements are for that finance agreement, not sure when they're supposed to get updated. And we found this really interesting niche where we can just provide the support to help to make sure that customer gets their insurance updated, make sure it matches the requirements of the finance agreement so they don't end up in like any sort of forced placed process. And we provide
Mm-hmm.
that as a service. It's completely free. So we work a lot with dealerships. We also work with a good deal of automotive finance companies, think like credit unions and banks. And we provide a optional voluntary service where people can connect their coverage, We'll make sure they have what's required per their finance agreement, make sure the VIN's on it, the trade-ins off it, make sure they have the right liability coverages, the deductibles, depending on who their finance company is, and basically make sure that people get it updated correctly. We see about 30% of people take delivery of the car without having their insurance done correctly. And that is the core service that we provide. And then afterwards, if someone opts into it, we take the information we gather from the process, and that's how we give them transparent database advice about their coverages, about what options are available, and of course, market comparisons.
Okay. Okay. So Woop, the main brand. Okay.
Yeah.
So Woop is consumer facing.
Technically, yes. Yeah. So Woop Insurance Agency is our consumer facing agency brand.
Mhm.
And so if we sold a policy through one of our insurance carrier partners, our deck page would say Woop Insurance Agency on it.
Okay. But you kind of said that even if Whoop ends up, so even if I end up not buying through you, helping me make a data-driven decision. Okay, so is it I'm thinking of it like for many years, I don't know if they still do it, but for many years, Progressive had like a price tracker where they told
Yeah.
like this
Yeah.
is how much it would be with Progressive, this is how much it would be with other carriers,
Yeah. Yeah.
right? And of course, Progressive is a price leader, so
Right.
they would win a
It's
lot.
easy for them to do it.
So is it a similar kind of idea?
Kind of. I'd say a little bit more robust. And I
Mm-hmm.
definitely didn't say they kind of can. Everyone can absolutely get our advice and do whatever they choose to do so with it. Our goal is to create value and make sure basically everyone's insured for what they need to. And
Mm-hmm.
if that means
Which
staying
is
with,
not great right now.
yeah, right.
Yes.
If that means staying with your current insurance company, we're going to tell you that flat out. We'll be like, hey, this is what you need to do. So how we actually provide that value and give that transparent database advice, a couple of really quick hit examples. So as you're probably aware, every single insurance rate is public. It's filed. We know
Mm-hmm.
what it
Yeah.
is.
Yeah.
And everyone's price is going up right now on the personal lines. So if someone connects opt in, we're going to tell you how much your insurance company has raised that price compared to the market. So while it
Mm-hmm.
feels like, oh, my price went up like crazy, that could be the case. And your partner, your insurance company could be raising 30, 40%. But what does the rest of that market in the state look like? We call it a rate monitor. So we actually track everything in there. We tell you if your rate's going up, and then we compare that to everyone else in the state. So you can get a quick idea of like, okay, yeah, this is just the insurance market right now, or, ooh, something's off a little bit here.
Mm-hmm.
Another thing that we do is what we call our insurance report. It's all in our simple insurance dashboard. Think of like credit card. So you know when you get like your credit report and it says, here's what's driving my credit score higher or lower, and kind of gives that detailed analysis. We do the
Mm-hmm.
exact same thing. We say, here are the main factors that an insurance company is going to look at. Here's what's going to make your price better or lower, and just
Mm-hmm.
very clearly explain this is why your price is what it is. And then here's some things you can do to change that or make tweaks, etc.
Okay. 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 So I've tried this a few times before. Doesn't always
Yeah,
work. And if it doesn't work, that's perfectly fine. This is why we don't do it live. But okay, so here's the website, right?
yeah,
All right, cool. So let's run through it with me. Okay, so
cool.
okay. And yes, that is actual real information. I
I
will
was gonna
black
say you
out.
got to blur this out later.
I
Later,
I,
right?
I I I I will blur out some stuff, but my phone number I might actually live there.
There
Okay.
you go.
Okay. So my girlfriend is the one that handles our insurance. So I don't actually know her login. And it's not saved on this computer either. So I can't do that right this second. But so right now our insurance is Liberty Mutual.
Okay.
And basically on there, one car, which is a 2012 Prius, renters, and
Okay.
an umbrella on top of it, right?
Yeah.
Okay. So
You must be in
basically,
the insurance world. You got an umbrella. You know
oh
what you're
yeah.
doing.
No, the funny thing is, it took me a long time to convince her that we needed an umbrella. She's also in insurance, Uh,
Yeah.
and but yes, we already had the umbrella. Just every year she would complain and be like, "Do we really need this?" And I'm like, "Yes, yes." They told her horror stories and convinced her. Okay, so basically, so we won't be able to do it right now. But so if I clicked on connect, okay, it would take me to Liberty, and I would log in right there, and it would bring everything in and give me the data I need, right?
Yeah.
Okay, perfect. Okay, now
Do you want to see mine?
that would be super cool. But hold on. Before that, so how many carriers? I'm guessing it's not every personal lines carrier. That's
Yes. So this widget here is not ours. So we're living off the on the rails of another
mm-hmm,
third party provider.
mm-hmm.
Canopy Connect. If you haven't talked to him, talk to Toby.
Yes,
He's a
yeah,
great guy.
we've
Yeah.
had Tonga
Yeah.
on the podcast. Okay,
Yeah. So we use them. I think, and don't like quote me on this. I believe they support about like 96% of auto policy holders, which is not every
fantastic.
single carrier.
So
And I
just about.
believe 92% of home. So like the vast majority, but not 100% of the
Okay.
marketplace.
Okay. So now if 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 I'm kind of clueless and I don't connect it, what can I get similar information from a startup full application, or truly like we're missing out on the magic if we don't.
Kind of missing out on the magic
Okay,
unless you
perfect.
see
So
it.
yes, let's. Okay, so I'm gonna give. So go ahead and share your screen. I'd love to see what it looks like on the back end.
All right, give me 1 second. I'm
But
gonna
but
I
by
wasn't
the
ready.
way,
Yeah.
yeah,
Yeah,
for
go
the
ahead.
listeners, we do zero prep for podcast episodes.
Yeah.
So Eric had no idea that he would be giving a demo today. It totally
Yeah.
worked
And
out. We plotted out.
I'm not even logging into my demo. I'm like 2FAing into my personal account right now. So we're going to know all about Eric here. Maybe we should blow some of
So I'm
that
gonna
out
have to
too.
remember to actually black stuff out.
All right, cool. So pull this screen out of here. I'm going to share my screen here.
Perfect. It should let you.
Cool. All right, we good?
Yep.
Let me switch sides here. Sorry about that.
No problem.
Not to offend you, but I don't really want to share my whole screen with everybody because I wasn't ready. All right, let's do this here now. Good. Here we are. Cool. This is a dashboard, and you
hmm
can actually see. So the
So
first thing we do with yeah, go ahead.
so you're with Travelers. So you would enter your Travelers username and password, and a couple minutes later, you'd be at this page.
You would be there instantly.
Okay, perfect. Okay,
Yeah,
so walk me through it.
cool. So you'd land here. You get your nice little auto insurance report, and gives you a little detail how many drivers and vehicles you got here.
hmm
I got good coverage, so I'm proud of that. Then we actually compare based off of all of the factors underneath it here, and we score your
hmm
insurance price. So we're
So
saying, yeah, go
so
ahead.
so right here, if I had state minimums with Progressive, because I just didn't know any better, it would give me a big warning right here that hey, your coverage is probably not right.
100%. And
Okay.
more than that, what we
hmm
normally do, this is what like we internally call our insurance plan. So this is going to go to before the call, you'd mentioned a lot of your listeners are like within the carrier space, and I think they'll like to hear this. So we are huge proponents of I don't really want to send someone back statements because frankly, I think it's sort of unethical. If I'm in the industry, I know the bad side of that. But
hmm
plus, if you're smart about your data and you're smart about understanding how like tiering and rating works, it's very beneficial for a customer to say, hey, look, it's going to cost you a little bit more, but I'm going to get you out of state minimums. We're going to slowly try to get you to 100, 300 liability limits. And then we're going to re-rate you because you're an incredibly better risk back to insurance companies. And overall, you're probably going to save way more money than I can right now just by
hmm
comparing your statement. So like that is actually when I talk about transparent data, that's what we incorporate here. So we're saying, here's what you have, but the pure data shows if you come in at a better underwriting tier, which means not having state minimums, I'm going to be able to save you money later on. So it's
Mm-hmm.
not all short term. Let's, chop off some coverages. It's not all upsells either. I actually don't believe in a lot of the coverages that are out there. I think they're not good for customers.
Interesting.
Um,
Okay. Mm-hmm.
I do. I have strong opinions, which is probably to get me in trouble, but I'm happy to share them too. um, so yeah, we actually tell people exactly what it is. We give our opinions and why we have those opinions. So for here, we score based off of the average cost within that state, rating for some of the prior coverages, all of the underwriting factors in here. So you get a good feel for it. This is mine, so I did not complete my quotes. So until someone requests quotes, I can't tell you all of your continuous coverage. I
Mm-hmm.
can't tell you recently purchased, but you can see in real time. Let's see. I think I got my insurance score. I got a good insurance score, so I went up to green. And this is our rate monitor here. So we're actually tracking every rate, every
Mm-hmm.
insurance company in every state, and saying like, yeah, travelers might have gone up a decent amount, but if you compare that to the rest of the state, it's actually super competitive.
Perfect. 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 So if this was Florida, Michigan,
Ah, it's tough,
Ca-
right? Yeah.
California, uh, but it could also be that even though I'm in a crappy state, I'm in a really bad carrier in that state, or not a bad carrier, in a carrier that's taking a lot of rate in that state, and maybe I should take a look at shopping it.
Yeah, I think this usually just helps people feel more confident because, like, the big thing that I think we as an insurance professionals lose is the average person doesn't really understand what's happening with insurance.
Oh, they
All
have
they really
absolutely no
feel
idea.
is like,
Yeah.
my price goes up. I've never had a claim or I've had such few claims. And like, why is it going up 30, 40%? So me, even individually, my home insurance price went up 40% in the last 2 years. That's huge. But like,
Yep.
I know that is the market. That's not like the insurance company. And this actually will help. We see very few people requesting quotes based off of this information. So when we do
Mm-hmm.
targeted email communications, very few actually look at this, but we do know it resonates really well for just helping explain why costs are what they are.
This is a great service to the insurance consumer.
Yeah.
Um,
Stop sharing for a second.
but and by the way, I saw the Whoop Advantage thing. What is the Whoop Advantage on the bottom
Uh,
left?
so the oh, I just stopped sharing. I could have like popped it up for and explained why it is. Um, I'm just reading off of it right
Perfect.
now. So three main things: industry level insights, so database, but it's personalized too. So it's like, hey, we understand how insurance works. We take specifically what you have, and then we give you customized recommendations for you. Because
Mm-hmm.
everyone's Googling insurance, and there's lots of blogs that are hyper like search engine optimized. And the end result is like, well, it depends for you. And like, that's a really poor, crappy answer for someone because they just want to, well, what is the answer for me? We want to tell you what the right answer is for you. We want to use data to be like, this is actually what you should do. Whether or not you choose to follow up on that, this is entirely up to you, but here's the right answer. Insurance truly is just data management and understanding risk. If you understand what that person has, you understand the data, you can make the right recommendation. There are right decisions.
Mm-hmm. All right. All right. So this gives the insurance buying consumer great data. It encourages the right coverage. It educates them on the macro factors in their state,
Yeah.
and how their carrier compares to others in that state against the state average. Okay. So I'm guessing 90% of people who go through it end up not writing insurance with you guys.
Uh,
So
Better than that, but most don't. More don't than do.
yeah. Okay. Okay. But enough do that it is a profitable side of Whoop.
Yeah. So, in terms of our business, right? So we engage exclusively through insurance verification. We do a lot of these, tens of thousands per month. So
Mm-hmm.
we've got quite a large distribution through credit union, banks, car dealership space. It's a free service we provide. We built the software, so it is in essence a loss leader.
Mm-hmm.
But for those who are like super familiar with customer acquisition costs in the personal line space, it is substantially cheaper than advertising. And it scales much better than referrals. And then, for those insurance folks, we acquire good customers because you already have the information and you're able to position in a way that is going to bring on the best type of risk, which is always really, really hard when you're just generally advertising personalized insurance anywhere. Because if you just advertise, you have to deal with adverse selection and getting the wrong type of person that's requesting quotes, and you're the person of last resort. And we found by doing this, we sort of self-select for really good prospective customers.
Perfect. Perfect. I am always curious on the actually that idea just hit. Like it just landed. Yes, that makes perfect sense. The people who engage with the tool and dig into it and learn about it are going to be great clients.
Correct.
You won't lose them on price next year because you've
Yeah.
taken the time to educate them. And yeah, they've self-selected into a tool that was more than just giving the cheapest price. So as a
And
former
like, we don't give
underwriter,
the
I really
cheapest
like
price.
that.
That's the
Yeah, yeah.
reality.
As a former underwriter, I really like that you are quietly, discreetly, almost without them realizing it, educating them in a way that's going to make them a better insurance consumer. And that's fantastic. I am always curious on the origin story. So looking at your LinkedIn, so you've got a degree in history, Australia. Are you Australian, or was it just an exchange program?
It was an exchange program. It was actually from New Zealand. I lived in New Zealand for just about a year.
Oh, okay, okay, Auckland. Yes. Okay, sorry. Uh, so and you have a degree from St. Joe's, but St. Joe's has a great RMI program. Were you RMI?
I was not.
Okay.
I think it was just starting. I think my sophomore year, if memory serves
Mm-hmm.
me.
Okay.
Uh,
Perfect. So you work the National Park Service for a little bit, and then you're like, I need a real job.
wow, that was a great job.
So I'm guessing that being a park guy doesn't pay fantastically well. Um,
um, so actually, this is like a throwback to
uh-huh.
American politics. I believe this is circa like 2009, 2010. Do you remember when like the hot topic was sequestering, and like in lieu of government shutdowns, they would slowly.
So the agency lost budget
And
for
I
a
got
period of time.
sequestered a handful of times, and I'm like, I can't do this
God,
anymore.
interesting. Okay, interesting. So how did you end up landing at HSB as an underwriting assistant?
So I'm going to edit this story because it's some of it's not so nice, but it's very funny. My aunt is a excess and surplus underwriting manager now.
Okay, so you had
Um,
an idea of what insurance was, basically, beyond just like what I have to pay every 6 months for my car.
yeah, no, not at all, not
Okay.
at all. She's in the insurance space, and she's like, hey, insurance isn't that hard, and like some of the people I work with make a lot of money, and she's like, you're a
Mhm.
pretty smart kid, like you should get into this industry.
All of that's true. Absolutely.
um, and so I basically I needed a job quickly and I wanted to just make a move. I took a job. Basically a temp. I was working through a temp agency
Hmm.
through HSB. And I am a huge proponent of like work your tail off.
Okay.
About a year from the time I started, I was a supervisor there and I had like 10 to 15 direct reports.
Holy crap,
And
that
then
was fast. Mhm.
yeah, with everything else, like 90% is luck. Like, are you there at the right time where you can do things and you have opportunity, right?
I, I, I think 80% is showing up, because
Okay,
even if you have good luck, if you don't show up and you don't do the job,
that's fair.
uh, but yes, timing, right leadership, right time,
Yeah,
makes a huge difference. Completely agree with that. So you become a manager, and now you are an actual HSB employee, no longer a temp.
correct,
Okay.
correct. Yeah. And then
Mm-hmm.
we were in their operations center. And when you're a manager for any part of it, you're responsible at some points for doing what they called like, I believe is their OMC, their operational management center. So you sat on the floor and you would do underwriting assistance, you would work with underwriting, you would work with servicing, and you would work with parts of claims. And it's
I
basically a triage
really,
center for all things
I
operations.
really,
So,
really love that you're getting
so
actual experience in all
everything,
those
like
areas.
everything. So you're
Amazing.
seeing like HSB inspection services, boilers. So you're seeing like this policy servicing, working with inspectors,
Mhm.
and then you're seeing claims FNOL, and then you're working on the underwriting side. So
So
like
let
in
me
a
let me pause you there for half a second. If any leader at HSB is listening, I would love to have somebody on the show to talk about this program at HSB because I'm a big fan of rotation programs and programs that give early career insurance pros a broad view into the industry. So this is fantastic. I'd love to. And if you happen to know who runs it, I'd love to have them on. Anyway, continue.
So I was there for a bit, and within operations, you can get stuck pretty quickly. And I had made some moves very fast. So I'm like, all right, like there's not a lot of place for me to go, but I'm super fortunate.
Mhm.
Munich Re actually owns Hartford Steam Boiler.
Yeah,
It's one of their
yeah. So
subsidiaries.
so
Yeah.
so I am former American Modern. So
Hey,
very familiar
fantastic.
so yeah, I did a little over a year at American Modern, and then I've gotten to know Munich Re America as in my recruiter life post American Modern. I actually got to hang out in Princeton
Got
and get
it.
to know them and
Yeah.
made a few friends. But yes, for any listeners early career that are not super familiar, so Munich Re Munich and then Munich Re America, and Munich Re America has American Modern, Hartford Steam Boiler, uh, and
I think Munich Re America Services now, which is they have an underwriting group,
is it
and then
isn't
I
it
think they have an excess and surplus now.
Munich Re Specialty? Is it ENS?
Specialty. That's right. That's
Yeah,
right.
so there's like 3 or 4 companies basically that are all part of Munich Re America,
Yeah.
and they're primary carriers, right? So Munich Re America is a reinsurance carrier. They might also do primary commercial lines. I don't remember. But and then American Modern is specialty personal lines for the most part, and then HSB is super interesting because HSB uh, does a lot of like specialty products and many often white labels them, right?
Lots
Especially
of
like
white labeling
equipment breakdown,
niche.
right? HSB
Mhm.
is the equipment breakdown company, and if you have equipment breakdown in your policy, there's a very good chance that regardless who your carrier is, that part is actually done by HSB. So HSB is a really cool company, and Munich Re is a really cool company. Okay, so you transition from HSB to the bigger Munich, to Munich Re America. So what do you do there?
So they were starting an innovation group they called the incubator there.
So good timing again.
That's what I mean. I started, maybe 90% isn't timing, but timing is critical, right?
uh-huh.
And they were looking for an ideation analyst. And I remember reading the job description. I'm like, I have no idea what this is, but like it's kind of vague. And I'm like, I'm not sure they know exactly what this role is
Yeah,
going to do.
the job title means nothing for sure.
um, but I'm like, this sounds fun. I'm like, and I'm a little bit of a cocky, arrogant guy. And I'm like, yeah, I'll figure it out. It'll be all good, right? So I get in there and had some really cool management, really cool team. And my job was initially to like, they would do idea campaigns and I was supposed to vet them for viability based off like using, business model canvas, talking with experts, et cetera. Really cool. Definitely didn't know what I was doing at first, but had some
Mhm.
great people helping me out. So we would do that. And then the challenge was, which is kind of like not to rip on Munich Re, it's sort of all corporate innovation. Like, all right, who does anything with that? Whose job is it then to like take that to life, to deliver it? And at this stage in my career, I'm like, all right, well, like no one's like picking some of these up. I'm like, I'll do it. I'm like, I'll learn. I'll figure it out as I go. And like, if it doesn't work and like it risks my career, okay, whatever. Like, I'll figure it out. And I was super fortunate. They let me sort of take ideas to life, like in for real. So one of the first ones I did, I actually worked with American Modern. So I did a decent amount of work, and we built a motorcycle telematics product, which was super interesting. And that's where I got
Mhm.
really in the weeds of like underwriting. I worked with a killer product manager and how do you like file a telematics product? How do you get an actuary to actually build a model out to apply the discounts? Then how do you distribute? We distribute through agents. We did a tiny bit of direct, although we weren't really supposed to at the time. Got myself in trouble there. Just super fun experience and had like ultimately didn't like take off too much, but really cool experience. Um, and then at the time, still to this day, Munich Re is like pretty strong corporate venture capital arm. So getting to see a little bit of
Incredible.
that, yeah,
They
really,
have backed a lot of insurtechs and a lot of winners.
they have. Um, Not super involved, but like getting to understand that space, like really learning what it's all about. It's sort of getting fascinating. And this is like 2014, 15, 16, 17, and like
So,
insurtech was
so
huge.
yes, for the listeners, okay. Um, 2013, 2014, we start seeing just a ton of investment into what we now call insurtech. Uh, and some of those start right, Lemonade and Hippo and Root. Some of them started making like big news and big waves, and yeah, it's a super exciting time for insurtech. Now we're a little more mature, but yeah, it was a fantastic time. So continue.
Super interesting time. And I could see the investments they were making. It was really cool just to be around. But something that always kind of stuck out in my head was like, I don't necessarily understand like the return on capital to build a full stack insurance company. And
Mm-hmm.
like I still don't know an enormous amount. And I knew even less then. And I was like, I don't get it. Like, I don't understand how we're going to be a return on the investment. Like, insurance companies can only actually make so much money. They're regulated. Like, you are legally only allowed to have so much profit, and then you have to lower your prices or have
Mm-hmm.
givebacks. We saw that in COVID. And from my perspective, like, I really think there's a better angle on the distribution, because if you can figure out a way to distribute more effectively, I think there's an opportunity to just have like potentially a smaller slice of the pie, but a way more profitable slice of the pie that can scale. And then you don't have to worry about like, okay, what is your cat exposure on this? Because as an agent, you're already distributing that amongst your different insurance companies. You're not
Mm-hmm.
inherently, you don't have to have huge amounts of capital for capacity to underwrite this. It's more about, are you effectively able to distribute? So then when I was within Munich Re, we actually built a standalone insurance agency. And I was given like tons of opportunity to stand that up from scratch, work with national mortgage lenders.
And
And
that's
then
a backpack insurance agency.
I now defunct, but yes.
Okay, I never even heard about that one. So why did Munich Re want an agency?
I think they let me go with it for a while to run with it, but I think there's and admittedly, it was quite small. So this wasn't like, we're making huge press releases.
Okay.
But I generally think is a decent bet to understand the market and whether or not like there's something worthwhile within the distribution. And
Mm-hmm.
like in all honesty, in my naivety, if like you're a reinsurer, you're talking different numbers of zero at the ends of every spreadsheet, right?
Absolutely.
Between distribution and reinsurance. But I think there's something worthwhile to say if you understand that side of the market, can you potentially better forecast future risk, future like what is the trend in the market before it even hits the reinsurance if you
Mm-hmm.
have a huge scale. So I think it was interesting enough to like do a small launch associated with it. So that was sort of the story there. And then I kind of fell in love with that concept of, innovating on the distribution that creates value, reduces that customer acquisition cost, is scalable. And then you don't have to worry about the risk of capacity. You don't have to worry about like the flip side of not only selling insurance in a meaningful manner, but having to underwrite the product and manage the claims and buy reinsurance when you need it. So I left Munich in 2019 tail end and started Woop.
So that thank you for all the context. So yeah, I was just noticing that. So founded in December 2019, which you know people might remember as the end of normal life, right? Like so basically
Yeah.
you launch your own company, you have 2 months, and then COVID happens.
Yeah.
So
Yeah.
did you find that the model you were going for did COVID help you, or did you have to completely redo the model? I mean, startups generally do pivot anyway.
Yeah. So I think what made it one, I was learning to fundraise for the first time. And we are a venture capital backed company. And like come with that comes a ton of the learning curve of like, hey, I don't have to sell with the backing of Munich Re. Like I don't get that anymore. It's just generally a lot harder. Um, and not having the knowledge of doing it before that, it's really hard for me to gauge of like this was really hard or I was going to run into this regardless. But we were like pretty aggressively going down the fundraising route. And then when the world kind of shut down, I'm like, I don't know if I can do this right. So what we did pretty quickly was we just bootstrapped. So we bootstrapped and I
Mhm.
had some really good, super talented full stack engineers that helped us build out the core tenets of the platform. And we did that until we could actually put together a full fundraising cycle towards the end of the pandemic. That was 2022.
Okay, so now you've raised some funds and like professionalized the back end. So it was an MVP basically, like a bootstrapped MVP before.
Yeah, yeah. So we've raised just under about 10 million in seed funding.
Congratulations.
Thank you. And yeah, I'd say the back end is much more professional. We have all of like, we just did our SOC too. So all that due diligence is in there and we're working with finance companies and all that. So it's scalable and it's working.
Fantastic. That kind of brings us full circle. So we talked about what the platform does right now. This episode will go out very likely, unless contractually I have to move things around because of a sponsor or something. Probably on June 19th. So about a
June
month
19th.
out.
Okay.
And when it goes live, I will tag you on LinkedIn and tag the company on LinkedIn. Are there any new features or new parts to the platform that you're excited about that you can already talk about?
Uh, I'm doing the math right now in terms of our sprint cycle and what's getting
If and
released.
by the way, if you say it and then you realize that, oh, I couldn't say that, we can either delay the episode or cut it out. Just let me know.
Yeah. Let's see. I think one of the cool things that I know we were working on, and I don't know if it'll be delivered by June 19th. There's two things that, and I'm particularly excited about that are in our roadmap for this year. So one, we don't have a good name for this yet, so I'm not going to say the name. And the name I'm going to say is definitely like copyrighted, so I can't actually. But there's this concept of like shopping insurance where, hey, I'm going to request quotes at this point in time, and people are going to shop that. That's sort of not how insurance works. And what I mean by that is like if you look at yourself as a risk, timing is actually incredibly important. So whether you have a claim that's falling off or a loss that is no longer rated, or you have a ding on your credit score at a certain period of time, or you've owned a vehicle for this amount of time, that really impacts the optimal time for you to be looking at your insurance. So what we're actually building is a time that says this is the right time and telling you at this date, this is the right time that you should be shopping insurance because it's primed for you to optimize for when you'll have the best price, you'll get pushed to the highest tier from all of the insurance companies, et cetera. So that's something that we're working on that I'm really, really excited about and sort of taking the analogy of like flights, right? Everyone knows the price of flights changed based off of the market. It's
Mm-hmm.
actually the same with insurance, which is kind of fascinating, but no one treats it that. That's something that we're driving towards that I'm
That that
particularly excited
that is
for.
super interesting. So I've never been an agent. I come from the underwriting side. I did claims first, then underwriting, and then a little bit of everything. But never it was I was never an agent. So as an underwriter, and I was middle market. I did a little bit of small commercial farm, then middle market. Uh, as an agent, excuse me, as an underwriter, I'm looking at the risk at the time of application, right?
Mhm.
At the time of writing it or rewriting it or whatever. Um, and I am not thinking about, yeah, like this is gonna next year will be the right time to shop it, or right. Uh, I don't know if agents do that. I've never had an agent mention it. But
I
it's
think good ones do because I think there's a lot of really talented agents out there.
but so basically you're building the first tool that should predict this
It'll
and
predict it and then it'll do the work for the person as long as we get consent of, hey, we think you should not shop right now. This is not the right time to do it. This date in the future is actually when you shouldn't. We'd like to go ahead and do that for you.
that this is brilliant, absolutely brilliant. It's so hard in the agency space to differentiate yourself, uh and this makes a ton of sense. Super super cool. I like
Thank you.
how so we've known each other for I don't know, 40 minutes.
Yeah, I was going to
Uh,
say, how long have we been recording?
exactly, 42 minutes. It's been 43 minutes since the start of the call. We've been recording for like 39. Um, but I like the way that you are looking at the personalized insurance sales process uh, from a very different perspective of uh, not a price shopping engine, which we've had many of in the past.
I
Uh,
can't, and no one can really compete on that, right? Why wouldn't Progressive
and
win that game, right?
and also you're also not looking at it like a 15-20 year agent who just wants better tech. You're solving the problem in a very innovative way, and I'm here for it. I like it. I like it a lot.
Thank you for that.
Eric, it's been a pleasure. Yeah, this has been a fun. I look forward to have you back, a year or two down the road to see what else you guys are working on and what the results have been. Uh, in case the listeners want to pick your brain at a conference, any idea? So by the time this goes live, it'll be after InsurTech Insights New York. So it'll be after the spring season, basically.
Yeah.
Will you be at ITC and any other conferences that you know that you or the team will be at?
I'm not gonna lie, I don't attend any of these things. I admittedly stay in my work corner for a while, so I am not a strong networker at the InsurTech conferences, either ITC or InsurTech New York. Although I have contributed to InsurTech New York and I love them. I think they're great folks.
They are great. I've known them for a long time. I had never been to one of their events. I went to their spring event this year at Chelsea Piers. It is a great event.
Awesome.
Especially if you live in the Northeast. It is a really great event. Uh, and I can't blame you, right? You're you're a rarity in our space. You're a founder that is neither looking for brokers to sell to, for insurtechs to partner with, or for carriers to sell to. So yeah, it's probably responsible that you're more focused on getting the work done than on partying with us at ITC. ITC is a lot of fun. Highly recommended.
I have heard.
Perfect. Awesome. Thank you so much for your time today. When this goes live in mid-June, I will tag both you and the company on it. Yeah.
Fantastic.
Thank you for coming on today.
Thanks for having me, Tony. It's been a pleasure.